Hello friends, this is Professor Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. It's my privilege that I am with you this day to talk about financial markets. So, under financial institutions, under financial system, in fact, we are going to discuss financial markets in detail, but broadly I am covering financial institutions, financial markets, financial services, financial regulatory bodies in detail in couple of sessions, and the agenda for today is to talk about financial markets under financial system. Okay, so friends, we have in the past we have talked about financial system, which is a broaderly part of any economy to help us mobilize funds from the deficit sector, from the surplus sector to the deficit sector, right? The fund which has excess of money, from where we can actually move that money to the sector which is in need, means deficit sector. So, for that, to ensure that it happens, we have so many players. We have financial markets, instruments, services, regulatory bodies, etc. So, the first thing, the first pillar is financial market. So, what are financial markets? So, financial markets are basically indispensable components of any economy which acts as intermediate, means a link is being generated between the investor and the borrower with the help of market, right. So, they channelize funds basically. These markets, they are channelizing funds between the savers and the money people who have less money, thus the deficit sector. And these market could include a very formal markets, which deals in asset securities, which are listed in the stock exchange or regulated exchanges, or just over the counter OTC, they are traded there. And then these markets can be basically defined a market in which financial assets are created and exchanged. When I say financial asset, it could be a bond, it could be a stock, it could be currency or derivatives. So, it's not a physical place. We generally go to market to buy vegetable, fruit, AC, fridge, clothes, etc. So, that is a physical place. But financial market need not to be a physical place, it is a market place, right, a virtual or an actual, where individual, companies or any player of economy is actually keen to trade in the financial security. So, it is a marketplace where assets are created and are exchanged. Okay. So, this is what the financial market is. Now, the financial market as of now in across the world, they are showing very mixed picture. If I talk about today, I was reading an article. So, as of now, means today's time, that there is a very mixed picture across the world. Cryptocurrency, for example, market, the analysts say there is a potential that they will go down by 70%. And in the long term, though it is expected the Bitcoin or any other cryptocurrency will do good. But then comes the Bitcoin, which has a sudden fall in this month only, October last month only. So, that has happened. So, we have a mixed response on the performance of financial markets. For example, the stock markets in US as of date, they are showing very good strength, and Dow Jones, which is a stock exchange, and they are maintaining a very bullish picture. S&P, the Standard and Poor's 500, where we have 500 stocks in it, listed in it, they are making a very new high. In Indian market, be it Nifty or Nifty 50 or BSE, they are also doing very well, showing very strong positive or bullish actually behavior. So, overall, the markets are of course volatile, especially, but they are giving a mixed signals, because the Bitcoin, those particular sector has suddenly gone down very significantly, almost about 70%. So, that's how the markets are very mixed. So when I talk to you about the types of financial markets within the financial system, of course there are many types of financial markets, because financial markets, the marketplace, a very broad one. You may get confused that there are markets where the stocks are exchanged, there are markets where money, the currency has been exchanged, there are markets where commodities like farm produce has been exchanged and is pledged and sold and purchased, right? So there are so many types of exchanges happening in the financial system. Accordingly, we divide financial markets into 5 parts: money market, capital market, foreign exchange market, commodities market and derivatives market. So I will be explaining these 5 in detail now. The first thing is money market. So money market is what? The money market actually deals in treasury bills, commercial papers, certificate of deposit. They all are having maturity of short period, which is generally less than 1 year. So they actually provide these instruments, TB, which is treasury bill, or CP, commercial paper. They provide short term liquidity or short term debt financing for immediate needs. They do not deal. So this money market does not deal in the long term. So typically the money market deals in financial securities with high liquidity, short term maturity and having a high degree of safety, relatively with lower interest rate on, because the maturity is short. So and the risk for the short term, we have to ensure. So the whole at wholesale level, it involves large volume trades between institutions and traders, whereas at the retail level, this money market, they include money market mutual funds bought by individual investors, money market accounts opened by bank customers, etc. Right. So this was about money market. Coming to second, capital market. What are capital markets? So the capital markets, they deal in stock, share, equity, bonds, debentures, and maturity for these assets, because what I am counting, be it stock or bond or debenture, they have longer life than, so these are all, of course these are financial assets what I am talking. So these now these assets have a longer maturity period, relatively means more than 1 year, and they provide long term finances, because debt or debenture, for example, bonds for example, here they have a very long maturity period than any short term treasury bill or short term CP, commercial paper, etc. So that's why it is very important to understand the role of each type of market, right? So money market is dealing with the short term needs, but whereas the capital market is providing you with the long term needs. So the major classification of financial market is, though the major capital market, primary and secondary. The primary market deals in stock market and only for those stocks which are the new stocks, the IPOs, and any subsequent stock trading which occurs in secondary. So this is another classification of capital market, where we say the broadly the capital market deals with the long term instruments, stock, bonds, etc. But we divide this into 2 parts, primary and secondary. Primary is dealing with the first time issues, IPOs, first time, initial public offering, and any subsequent issue of stock by any company that is being traded in the market which is known or called as secondary market, right? I hope I am able to help you understand. The stock may be traded on listed exchanges, right, such as New York Stock Exchange, NASDAQ, Nifty 50, BSE in India, or over the counter. And most stock trading is done via regulated exchanges, which play a very important economic role. So it means stock exchanges are also part of the financial system, right? So that is also a financial institution for that matter, and they are the ones, stock exchanges are actually helping a effective functioning of capital market, especially for stocks. Okay. Then in the capital market, the major participants in the stock markets include retail and institutional investors. Like if I can buy, you can buy, or a bank can also buy, a life insurance policy company can buy, or any non-banking financial institution can buy or sell, right. So trading is possible by individuals as well as the institution, and the market makers also are there. And then we have the specialists who are there who are participating in this capital market, who maintain liquidity, who provide two-sided markets, right. So these participants are very important, because then market becomes two-sided. There is a demand, there is a supply, there is a sale and purchase. Brokers are also there, who are third parties. They facilitate trade between buyer and seller. They do not take any actual position in a stock, but brokers, they actually facilitate, they help a seller to sell, they help buyer to buy, right. So this is how the capital market is functioning. Then in India, we have Indian stock market, which is very sensitive to various factors, including corporate results. Corporate results are announced, we know annual results are there, quarterly results are there. The moment any company shows very good growth, the stock goes up. The trade deals are announced, the stock goes up. Any commodity price, they also affect. So these are the activities or actions which trigger the market either weak or strong. And then earlier in the year, the market had seen in India has seen a very significant volatility because of the trade policy discussion with certain countries, that, and foreign fund outflow was happening, but now there is a stability, now it's better. So that is how the Indian capital market is working. When it comes to US stock market, as I said, currently Dow Jones is doing very well, showing very bullish picture, because of the major reason is been given or assigned, because AI is picking up. Tech earnings are going very high, and because of that, the analyst says, this is not my personal understanding, this is the outcome of the articles I have gone through. I'm sharing the, because I don't want to influence anyone positively or negatively. I'm sharing the understanding of analysts, that the stock market in US is behaving bullish because of the growth of AI and tech earnings. Right. In India, the markets are doing very well because the economy is growing, because of the forecast of many bodies about the good growth prospects for the Indian economy. Right. Then coming to the third type of market, the financial market, which is foreign exchange market. So what is foreign exchange market? The market which deals in, of course, the foreign exchange, right. So the foreign exchange or the forex market is actually dealing in currency, be it Indian rupee or be it dollar or be it euro or be it taka, any currency. This is the most liquid financial market. There are 5 financial markets, as I said in the beginning. The most liquid one is the forex market, because the prices actually vary every minute, every hour. So these markets, they facilitate the international trade and investment by enabling currency exchange. Let's say I want to export something, right. I want to export in X country. So I am based in India, I want to export to Y country, or I want to import from Z country. So every country has its own currency, right. So how the exchange of goods and services, this trade will happen? We have to have some role of a market which is known as forex market or foreign exchange market, because we have to agree upon a at a price that I will be selling you these clothes, these spices, these machines, these telephones, these mobiles, etc. at this price. Then the currency of those two countries which are dealing in this business is different. So what will be facilitated? This trade will be facilitated by the foreign exchange market, right. So this international trade is possible because of the operational feature, or because of the foreign exchange market operationality. Then the foreign exchange market is the most liquid market, as I said, in the world. Why? because we are actually exchanging cash, right? And cash is the most liquid asset in all the assets we have in any balance sheet. Okay, the currency market actually handles more than 7.5 trillion of exchange in daily transactions, more than future and equity markets combined worldwide, globally. If we put up the exchange together, this is the kind of business we have in the foreign exchange market, right? 7.5 trillion daily transaction. So such a huge exchange of foreign exchange or transaction in the forex market. Some country is buying, somebody is selling, somebody is buying, somebody is selling, right? And that trade happens in the foreign currency. So do we have so many one important currency of one nation which is being used maximum. Euro is the second one, other after dollar, and there are countries who are trying to make their currency acceptable for exchange, in many countries. So that is always there, but this total market of foreign exchange is very, very huge, highest in all the 5 kind of markets we have in the financial system. Okay, then further, Indian rupee for example and US dollar exchange rates are influenced by many factors like trade for the demand, but the bottom line for any exchange, be it US to Indian rupees or Indian rupees to taka or Indian rupees to euro or US dollar to euro or whatever, any currency exchange, the bottom line is always demand and supply rule. The demand and supply concept of economics is very well applicable on the foreign exchange demand as well, the price of the foreign currency as well, right? How much is the demand of X currency will decide the price of that currency, and how much is that needed and how much is the supply, right? So the demand, for example, why do we need dollars? For example, we need dollars unless X country, for example, need dollars to buy oil from the suppliers. So if there is a high need of oil, the demand for dollar would go up, provided that country accepts only dollar. The company who is selling, the country which is selling oil is accepting only dollar or only euro or only Indian rupees, whatever. So the demand for that currency which is accepted by the supplier or the supplying country will be higher, right? So that higher the supply, higher would be the price, higher the demand, higher would be the supply price, right? And so is the supply. So the both demand and supply rule of economics are very much applicable on broaderly on the foreign exchange prices and the market as well, right? So moving forward, now I would like to talk about the commodity market, the fourth pillar in the financial market. So the commodity market deals in raw material, gold, silver, oil, corn, paddy, etc., etc. Typical maturity of them is on spot or future contracts, depending upon the contract's details or the specifications. It manages the prices and the risk associated with physical goods. And the physical goods, when I say, could be gold, the gold could be commodity, the silver could be commodity, oil could be commodity, corn could be commodity, paddy could be commodity. Any commodity can be exchanged in the commodity market. This is the another market as a part of financial system, right? So the most of the reports which are published in 2025, they mention the fluctuation in oil and gold prices are due to the supply concern and the safe havens demand amidst global uncertainty, because in the recent past we have couple of wars going on between couple of countries. There's a trade war also, there's a there are so many more economic issues going on across countries. So that especially the war situation, the major supplying countries who are supplying oil. So this report says there is a fluctuation in oil and gold prices. We have seen the gold in India, how 2 years ago, I remember in 2023 December, the price was somewhere about 50,000 for 10 grams, and now it is 1,20,000 or 30,000, something like that. It has gone significantly higher. So was true for silver, and then suddenly the demand for gold from few countries has suddenly high demand, that has caused the price to go up. There could be sudden, same is for oil, the supply side of oil is affected. There are certain restrictions which are expected, which are actually laid down, which are expected to be followed by the supplying country, and that has caused the oil prices to fluctuate. So the commodity market is affected, right? So this market basically deals in futures, options, forwards, swaps, and maturity for these assets vary because the value is derived from the underlying asset. The value of these futures, options, these which we prepare, they do not have the direct value. Their value is basis on the underlying asset. Underlying asset could be oil or gold or silver or a paddy or wheat or any produce. So since their supplies is affected by the price and the supply and demand, the price are affected, the maturity of these assets also varies because they are dependent on the underlying asset. And these market or this particular derivative market, they primarily focuses on managing risk or speculating on price movements. Okay, and the derivative is a contract. If I say what derivative market is, a contract between two or more parties whose value is derived. The derivative's value is derived. That's why we call them as derivative. The value is derived on an agreed upon underlying financial asset or like a security or a set of assets like an index. So any underlying asset could be used that to decide the value of derivative markets. And the future markets, because we have future, we have many more derivatives, as I just said, they are where future contracts are listed and traded. Unlike forward, we have future contracts, we have forward contracts. Forward contracts which are traded at OTC, over the counter exchange. Future market utilize standardized contract specification. They are well regulated and are actually they use clearing houses to settle and confirm trades. Whereas the future market has is a different role. Then the option market, the futures are there, options are there. The option market such as we have for example Chicago Board Option Exchange, CBOE, is that list and regulate options contracts, right? Both future and option, the primarily two markets in derivative markets. Exchanges may list contracts on various assets classes such as equities class, fixed income securities means debts or bond class, or commodities class, right? So derivatives may derive the value from either commodity or any particular asset, fixed income security or assets like equities where we do not have fixed income. So this is primarily about the derivative markets. Certain derivative markets are exclusively OTC, means over the counter. So they are making up an essential segment of the financial market, but generally OTC markets and the transaction that occur on OTC themselves they are far less regulated than the markets which are regulated one, the stock exchange, etc. They are less liquid, they are little less clear because OTC markets, generally this OTC market is little less regulated, less liquid as well relatively to the other markets which are there on the stock exchange. So friends, overall, these were the 5 major markets which we discussed. The last thing I want to talk about is importance of financial markets. To conclude this topic, there are few important points under financial markets. Number one, they are a cornerstone of economic growth. Number two, they attract domestic and foreign investment. The number three, they help businesses innovate and create jobs. Number four, they provide essential funding for government services. And lastly, economic stability, is the important function of the financial market. So let me explain it another 2-3 minutes before I wind up. So cornerstone of economic growth. So economic growth is something which is the agenda of any country for that matter. Every country wants to grow at a higher pace. For example, India is aspiring to be a fully grown up economy, developed nation by 2047. So every country is targeting for the economic growth, and financial markets are really important pillar of that agenda for any country. So they work as cornerstone, they work as a bottom line, as a foundation for that economic growth. And then the foreign investment or domestic investment is possible if financial markets are there. The forex market, for example, is the essential to have the foreign investment. FDI, FII, those are possible if there is a foreign market, if there is some foreign market been created in that country, right? Or even for domestic investment is only possible if financial markets are there, because financial markets are helping us the exchange, right? The exchange of financial assets. Then the financial markets, they help businesses to innovate and to create job, because they are able to get funds. By getting funds, these financial markets are helping generate funds for the the sector which has a shortfall, and then those funds are utilized to create employment. Those funds are utilized to carry economic activity, productive activity, and that's how the jobs are created. And these financial markets are essential for funding of the government services even. The government services are possible because financial markets are there. They are helping even government to generate funds. There are so many countries who are getting where so many projects, be it green corridors, be it solar energy, or any aspirational projects where huge investment is required. The government of other countries or other private players of other countries may extend, or even the Indian, like within the country of that, they are able to provide funds because the financial markets are there and helping transfer those financial funds. And the lastly, economic stability is possible if financial markets are effective, right, are running. So financial markets are so important to avoid recession, to avoid the situation of unemployment, and this is how the whole whole system of financial system and financial markets within the financial system, they help us avoid those economic stability situation. So my friends, I'm sure that I was able to help you understand 5 major types of financial markets within the financial system. Of course, financial system, and this was the financial markets were the first pillar of financial system. In future, we will be talking about financial institutions, financial services, regulatory bodies, etc. And I hope to see you in future as well. And now this is a time to wind up. Thank you very much.